Good afternoon. Welcome to GrainTV. It's Wednesday, March 18th. We had a trade that was higher today. Let's take a look at the grain hedge trading platform and see where we closed. In corn, futures were up 4 cents a bushel while beans were up 9, and Chicago wheat futures were up 7.5. Cody, we see a reversal here today. What's sort of driving us to the upside?
Yeah, well, first of all, I think what we've seen over the last couple of weeks is really just kind of choppy price action. And I know that yesterday we did break through some key support levels, but we didn't really have that impulse to the lower side that you'd really expect, that continuation. Today we kind of chopped around on the low side as the market paid attention to the FOMC statement that came out at 1 o'clock Central Time. That FOMC statement, really what it said is they eliminated the verbiage patient there in their statement, and really what the bottom line is that those that expected interest rates to start their first increase since 2006 earlier on rather than later were a little bit disappointed. And you can see the results here in the dollar. Basically what we saw is that the FOMC is not going to be raising rates, or is very unlikely to raise rates in their April meeting. They're really going to be focusing, again, referring to the job market, going to be focusing on that. They're going to be focusing on inflation, hoping to get to that 2% mark. That's really the target there. What we saw as a result of this is the dollar decline. When the dollar declines, it helps out commodities because we get more competitive on the global market. And you can really see that in the 5-minute wheat chart. Take a look at the last 10 minutes of trade. You can see that wheat was able to really get a bid under it and add some gains here to the overall price.
Right. And Cody, let's take a look now at the weekly ethanol numbers that came out this week. We were up 3,000 barrels per day compared to last week. We're still off of the highs back at harvest time, but that's to be expected. I think what's the story here is that we continue to have reasonably strong ethanol production, even in light of the tanking that crude oil has been taking. But there is some sort of bad news on the front for ethanol.
Absolutely, yeah. When we look at some of the news that came across the wires today, it looks as though some Brazilian ethanol will be imported into the U.S. So, of course, that's not very good for U.S. ethanol prices and overall production distribution of ethanol here in the U.S. Guys, take a look tomorrow here. We do have export sales out, and this is something that we are focusing on very closely, particularly in terms of soybeans. We've seen the Brazilian real really lose ground versus the dollar recently. We've seen the dollar really very strong relative to other currencies, with the exception, of course, of today's price action. But when you look at export sales, the report that comes out tomorrow is going to be reflective of the previous weeks here, and where we did see strength in the dollar, weakness in the real. And what that means is there's a very good chance that we could see soybeans export sales come in a little bit lighter here than even analysts' expectations. And right now, expectations for these export sales tomorrow morning for corn between 500 and 700,000 metric tons, soybeans between 250 and 450,000 metric tons, and wheat between 350 and 550,000 metric tons. Other than that, that wraps up today's show. If you guys have any questions at all about what we're talking about, particularly as it relates to the FOMC minutes, sometimes that can be a very difficult concept to grasp, and how it impacts grains, how it impacts interest rates, and your overall farm marketing. But please, if you have any questions, give the office a call. Number's 877-472-4607. Thanks a lot for tuning in. We'll see you here tomorrow.